The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 2nd magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, well, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow down 548 points. That's 2.25%, trading out of 23,552. The S&P down 63 points, also over 2%. NASDAQ 100 down 2.9%. That's 188 points to the downside. 63.92 is her print. Russell down 28 points, 1.8% out there. The semis are off nearly 3%. That would be 39 points. That's trading out at 1289. So it is mean and red across the board out here, with the exception of the volatility index up 16.4% as we speak right now. That's $3.28. 23.25 is what she's printing at. Gold is up 17 buckaroonies. That's 13.44. Silver is up 33 cents. That's 2% to the upside. 16.60. Light sweet crude back $1.60. Leading the charge here to the upside today, it's Humana. HUM is a ticker symbol, up 4% or $10. Commvault Systems up 6.5 bucks, 11%. You've got United Healthcare Group up 340. Science Applications International, that's up 7% or 334. To the downside, it is Priceline off 71 bucks, nearly 5% to the downside. Volume of 6.5 million shares. Booking Holdings down 52 bucks, 2.5%. AutoZone down 32 bucks. So there's certainly things to look at. Of course, I want to look at what you want to look at. The questions inside the den so far. The first question was, any thoughts on the current markets? S&P, I suppose, or Dow, that this is following along the 1962 analog. And I don't have that answer. I tried to get my charting system to go get some. Maybe I can do it. Maybe there's a way. You know, if there's a will, there's a way. And my name is not Will, but let me see if I can switch over to this one workshop. My system is acting a bit slowly. It seems to do that these days on markets like today, big price movements as we come onto the air. So let me see if I can actually, I was trying to get a chart that would take us back to 1962 on a weekly basis. And son of a gun, I don't have that. What I do have is the monthly chart. So let's go take a look at it. Let's go take a ride on the reading. Let's go back to 1962 and see what it is that we see out here. So 1962, if I've got it right. Now, this is the Dow that I'm taking a look at, so it's close enough. We saw a top, it looks like in November of 1961, actually. That's when there was a high. And price went down all the way to form a bottom into what looks like June of 1962 out here. So from a percentage move standpoint, let's go see if we can figure out what that is, which we can. So it looks like the high in 1961, that's what we're going to use, is 741.30. So let me put in 741.30. Let's go take a look at the low out here on the trading month of June back in 1962. That was 524.60. 524.60. That was about a 30% decline, 29.2% decline to be exact. Now we're down about 10%, I believe, somewhere in that 10 to 12% range out there. Now, unfortunately, if I switch this thing off the monthly chart right now, it's liable to freeze me up. Why, I don't know. So I don't want to do that. Is there anything here? Now, what I can share with you is that the pattern that is associated with every bear market, that's considered a bear market. That's a 29% move to the downside. That pattern confirmed and was in effect back on January of 1962. This is using a monthly chart for the Dow. And we'll go forward. I'll go forward and pull up another live chart for the Dow. Put it on a monthly basis, we're going to see that same pattern is not in place. Now, this pattern, by the way, is something I'll be teaching, not this coming Wednesday, but the following Wednesday. I believe that is April the 11th from 5 to 6 for subscribers. So if you're asking me, does this follow the analog, and I take a look at a monthly chart, and I use the Dow as an example, my answer is immediately going to be no. That doesn't mean it can't follow the price aspects of it, but it doesn't have that topping pattern that has preceded every single, at least all of them that I can find, going back into the 1880s for the Dow. And what I mean by that specifically is if we go take a look at the current chart for the Dow, let me pull that up. Now, let's switch this over to a monthly as well. Oh, I think I do have it up here as a monthly. No, that's not the one I wanted. Give me just uno momento, por favor. I'm just going to add one little tool to this Dow chart out here. Give me a second. And this is going to be the monthly chart. I need to add some more time frame to it to really be able to prove the point, or prove at least what Stevie is looking at. So just give me another momentum. That doesn't even make sense. Another moment in time. Let's put 20,000 days out here, and hopefully this doesn't take too long to go ahead and update. It shouldn't. But what we will see, and this tool automatically is displayed on my screen out here, and we can see the price was going higher just fine. All that the monthly chart here for the Dow Jones Industrials, what this tells me is that price is just a normal pullback, just working off an overbought condition out here. But the same type of pattern that was present back in 2007, back in 2000, now back in 1961 and 62 is not present now. So hopefully that assists you there. Now, we shouldn't stop just there, because the reality is that same pattern could form on a weekly or a daily. And if we go take a look at the daily time frame chart out here, we pull the Dow over. This is the daily time frame. What you're going to see is the pattern that's associated with every bear market inside of the Dow at the highs. It also can work at bottoms in the Dow. And that's the pattern that is present right now. No confirmation. The only way you get a confirmation of a bottom is you must close above Stevie's red line. That's up at 24,075. No threat as we speak today. So hopefully that answers your question. What do I think about the 1962 analog pattern? There's a couple things that are missing that I would be looking for. Steve Rhodes with TFNN. We'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 541. S&P is down 63. So let's see. Ruby asked if the Dow from the close on Friday is down about 630 points. I'm sorry, the close on Thursday. My apology. Friday being a holiday. By the way, I hope everybody out there had a great holiday weekend, and you're raring to get back to work out here, as we are. As the market is. You know, no slow Mondays out here. You blink and you're going to miss 100 points or so. But the question was, is it from Thursday's close inside the Dow Equity Futures contract, are we down about 634 points? And the answer there is yes, approximately. Measured right to the T. But, yeah, that's a 600-plus point move out there. Morgan asked if this is another failure at the lows. Now, we took a look at the Dow, just looking at the 1962 area. And looking at the weekly and the daily, I'm sorry, the monthly and the daily. We didn't take a look at the weekly out here. But with regard to the S&P 500, let's go ahead and switch indices and try to answer Morgan's question. Here's what we know, Morgan. What we know is prices moving down and doing less relative energy as we speak right now. The same pattern that precedes every bear market is now in process at the lows out here. Now, what we don't know, this is not a completed pattern. We just know that prices have been moving lower, doing a less relative energy. That's why my system automatically draws a diagonal line out here. The only way for this pattern to confirm that there is some type of bottom that would be in, price must close above Stevie's red line. That's 26,000. That's 2648.12 as we speak right now. But what we can do, and you know, I'm not sure whether we take this with a grain of salt or we don't take it at all. But let's take a look at the S&P, the SPY volume out here, and we're doing volume inside the SPYs right now about 72 million. Let me go ahead and actually put that volume line on my screen. By the way, the average movement in the SPY is $5. The average movement, price movement inside the S&P is 50 points. We're down right now 64. Average price movement, this is of the last 10 days. Last 10 days, 485 points inside of the Dow. We're down 555 out there. Excuse me, but back to the SPYs. Let me go ahead and put my volume bar on the chart. I can read it off of the screen out here, but I think some of you would like to go ahead and actually see that. So you can see we're at 72 million. Now, that's going to equate to, give or take, 116, 120 million shares come day's end. Now, at 120 million shares, what you are doing is you're moving down into, you're trading inside the swing point from February 9th. That's got 283 million shares. But very likely, Morgan, you'd have to say that price is going to close inside this bar today. The only way it wouldn't is if you see it close on the SPYs above 263.61. Anything is possible, so we won't say that it's not possible. But if you close inside here, even with light volume, you can go down and test the low. That would be 252.92 out there. So is this a, what did you use as the exact word? What did you use? You said another failure at the lows. I'd say price is pulling back on light volume. It's doing so with less relative energy, but that alone does not mean price won't go lower. And as we take a look at volume in the SPYs and where price would close, I would say it'd be just as good of odds that you're going to go test the low of 252.92. Now let's try to put the pedal to the metal and go take a look at what's going on inside the QQQ series ETF out there. 44 million shares to the downside. So 44 million shares is going to equate to, at the end of the trading session, approximately 71 million shares. Now, 71 million shares is going into 113. So you've got that light volume retracement as far as the swing point that was formed back on the trading session of February the 9th. Now, in order to see some type of failure, and that's what it sounds like you're looking for, Morgan, you would want to see, this is where your real clue could come from, I think. No, I don't think. This is where the real clue could come from. If during the next several hours the buyers come in, as they have many times during the last several weeks out here, we've seen lots of selling. Typically the selling had been going on through the close in Europe. Well, Europe's not open, so the market is confused, and it's waiting for Europe to close. Maybe it doesn't do that till tomorrow. Nonetheless, a close today above 157.24 would be a failure on price and volume, and then that would be a true failure at the lows out here. Last time we were down here was on Thursday. That was 68 million. Again, that's going against 113. We're going to do approximately the same type of volume today, maybe a bit higher. Heck, on March 28th, we did 89 million shares. We are not on pace to do 89 million shares. So what we have is the makings of a real large consolidation pattern. And that means a lot of whipsawing going on back and forth. If we looked at the NDX 100, so I'm curious, what did I do with that chart? Oh, I put it right here. Okay, good. I didn't want to lose that chart because it had a bunch of work on it. I'm just curious, what does the NDX 100 pattern show out here? Anybody have a clue what's going on inside the NDX 100 when you take a look at it? Well, I've got a clue. I drew this in earlier. And if we take a look at this, there is a real possibility that what the NDX 100 is forming right now is a three drive to a bottom pattern, albeit one that has just simply been forming over the course of the last, 6 trading sessions, but it qualifies. It's a beautiful, nearly beautiful, three drive to a bottom pattern. As we are coming into that swing point from February, the, February the 9th out there? I believe that's, I'm trying to get my cursor, but you can see things are relatively slow. This is not how Stevie typically operates. And so February the 9th. Now, this pattern would not confirm until we saw some type of bullish reversal signal. That would occur tomorrow, or could occur tomorrow out here. So if you were to see a bullish move and you were to see the NDX 100 close above 66.80, that is Stevie's red line, well, then you will know that that three drive to a pattern truly worked. What would that mean? That would mean that the NDX 100 would at least head back to its gap where it created that island top out here, and that's on March the 19th. That's what you would be looking for. So let's carry this through, or we already did that. We took a look at volume inside the Qs, light volume pull back into a swing point. Now on the daily chart, you can see that potential. I call it a potential. Three drive to a bottom pattern. Doesn't mean that it will form. We don't know what the cavalry, whether they'll show up tomorrow or not, but just one more thing to look at out there. So, Morgan, I hope that helps you with regard to how it is that I would and am looking at the markets. I don't see any requests out there. Don't forget, you can always let those fingers do the walking. You can send me an email at steve@tfnn.com. Just inside that heading, subject heading, please put radio show question. So what do we want to go look at next out here? What do we want to go look? Of course. I know somebody. I heard somebody's out there say, come on, Steve. You know we want to look at gold. It's up 19 buckaroonies. Is gold breaking out again? And it's an excellent question out here. If we take a look at gold priced in euros and priced in dollars, we're at an interesting crossroad for gold priced in dollars. Look, this is a closing basis because we're looking at a line chart out here. And if we take a look at, and this is an approximate drawing, it's not exact, but if you take a look at the closing price on January 25th, you take a look at the closing price on February the 14th, you're going to see prices right up against that little descending trend line. Something to think about. But we'll do a little more thinking during this break. We'll come back and we'll tell you the real price that gold needs to move above in order for gold to be breaking out. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So what are you doing tonight? I hear there's a basketball game. Yeah. Is there any chance that Michigan, the Wolverines, can play with Villanova out there? Not if they played like they did against Loyola, where they basically hung on for their lives up until about, I don't know, 10 minutes to go inside the game or so. Whereas, of course, today's another day. Whereas Villanova was just strong out of the gates. So strong, I couldn't keep my eyes open. No reason to. Seemed like that game, although these games, they get close at the end out there. So the problem is, speaking of keeping your eyes open, what time is tip-off out there? I heard it's like around 9:15 at night. Clearly, these folks that put together the tip-off, they're not traders of financial futures or anything. 9:15, that's what time we're closing our eyes, not sitting down with a bowl of popcorn or who knows what to begin watching a basketball game. So therein lies the quandary. What should Stevie do? Certainly get some rest if I'm going to stay up. Hey, you don't want to talk about that. You want to know the number that gold needs to close above in order for it to really break out here. And that's simply going to be gold priced in euros. Many of you, most of you already knew that. That number has not changed. That would be $1,107.70 in euros, please. Because if gold closes above that, then you'd have to say we're on to its next phase to the upside. I'm showing you here because we're using these line charts, closing prices of each gold in dollars, gold in euros. That's the bottom portion of our screen. If we just pull up this chart up here, where we go ahead and we incorporate into it highs and lows and so forth, you're going to see that price is not anywhere near this little descending trend line that is out there. That would be in the 1360 level. You're at 1346. It can do that in a heartbeat. So is there any action to take just at the moment? And I would say no. If you got into it because of the full moon, when was that full moon? Was that full moon on Saturday? Was it Friday or Saturday? Yeah, well, let's see. Yeah, it was Friday or Saturday out there. And oftentimes, the interesting thing, you take a look at full moons can have an impact on a number of things. The way that it used to impact gold more often than not was it was the beginning of an acceleration move. In this case here, maybe it is accelerating to the upside. One thing is for sure, if that is the case, we're going to see these levels of gold inside of dollars, but mostly inside of euros, fail to act as resistance, and that is the 1107.70 level out there. If we go see what kind of conviction we have in between inside the mining equities out here, if we take a look at the GDX, probably somebody was going to ask a question there. We can see the GDX is moving into its most recent swing point from the date of March the 26th. There were 44 million shares out there. You're light in the loafers when we take a look what volume is doing today. Nonetheless, if you close above 22.26, that says you should go test the high of 22.51. Yes, light volume, you're at 21 million shares. There's not a chance, there's always a chance, but there's not really a chance that you're going to close inside that March 26 swing point with more than 44 million shares. Just not likely. If we take a look at some TAS market profiles, do you want to do that? We could throw that on the screen out here. Let's go take a look at daily and weekly. You're trading right up into the daily top of its box out there. Oftentimes that can be a level of resistance. In this case here, not a big deal. But if it did close back below the top of that, 22.38, well, then you know you're in this little tight trading range out here. Top of the weekly, by the way, would be up at 22.82. That gets you right back into the trading session of February 14th. That's right, Valentine's Day, which had 95 million shares. Now you can get a feel for just how weak the volume is to the upside. Maybe that's more bearish or trading range bound inside of the mining equities out there. I don't know. What I do know is until gold gets above that level in euros, it's just kind of the same choppy market that we're trading in inside of the overall equities out here. Okay, so we did that. We took a look at gold. If we take a look at silver out here, what is silver doing? Anything really positive in silver? Silver's kind of an interesting chart. Let's take a look at the SLV. Just curious here with regard to volume, what it is doing on this move out here. And so 5.8 million shares today. And at the swing point that is traded into, March 26, 8.5 million shares. That's at least close, but no cigar out here. Let me see. If we do the actual volume, so we're at 5.8. Whoops, I got to do an equal sign first. Equals 5.8, and divide that by what? 4 hours, right? 9, 3, 10, 3, 11, 12, 13. See how I use my abacus out there? So if we divide that by 4 times 6.5, that's going to give us a number of approximate volume of 9.4 million shares. And well, you're pushing into that swing point. I take that back a bit lower, because you really should be looking at March 6th out there. So, and you're trading right in the top of the box. I'm not saying in sell. I'm just saying that this is nothing more than what looks like to me the garden variety consolidation. Everybody waiting for the euro, or I should say gold price in euros, in order to really throw a garden type of party out there. Okay, so now we've taken a look at silver, gold, as well as the mining equities. What should be next up on our list out here? Probably some individual equities, don't you think? Some individual equities out here. Which one should we look at? Maybe it should be the usual suspects. In fact, let's go take a look at one of the unusual suspects, Amazon. Amazon, the target of Donald J. Trump out there. So let's go see what Amazon shareholders are doing. Not much. What we've seen here inside of Amazon is we've seen price pull back into February 9th. 14 million shares out there, and today you've done 6.8. We don't have to do the Stevie Abacus math out there to know you're pulling back with light volume. Now, back to Morgan's idea out here. If you saw it close today above 1383.50, you're at 1377.04, then you'd have a failure of price and volume at the February 9th swing point inside Amazon. What happens if you close inside that, meaning below 1383.50 out there? Well, then you can go test the lows, but you do have some mighty fine support. Did I say fine support? I mean mighty fine support, that being the bottom of its TAS weekly profile. That's what's going on inside of Amazon. Let's go take a look at Apple, see what it is doing, right? Because all we have to really do is take a look at the top 5 weighted, top 10 weighted. I think you get up in the NDX 100, you get up into that 60-ish% out here. In the case of Apple, not making its way down anywhere near the February 9th swing point, just simply this little consolidation, so to speak, along a set of lows. One from March 23rd, 41 million shares. Then a few days later, 41 million shares. Today, you're 20 million shares. Yeah, you're trading down below the bottom of its TAS daily box, but you've got no emphasis on the phasis, meaning volume out here inside of Apple. That's 11%. 11-point-something% of the NDX 100. Where's all the volume? It is kind of the end of a holiday weekend. Maybe that's the deal. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow's off 627 right now. S&P down 73 points. Did you hear that Zuckerberg response? I heard it earlier this morning while I was running a couple errands out there. Now, if you didn't hear it, it was a whiny butt answer with regard to he was trying to rebut Tim Cook's comment from last week. Now, here's what it reminded me of. So for those of you that heard it, you'll get what I'm saying, and those of you that don't, you'll probably still get what it is that I'm saying. It reminded me of when I was a child. In like the elementary school level out there. And my mom said, Stevie, take your raincoat. And of course, I said to her, because some of you have said this before, yeah, but Chris, now that was my best friend living across the street. I said, but Chris isn't wearing his raincoat. And my mom, she was pretty intuitive. She said, oh, thank you very much. Take him this raincoat then. Both of you need a raincoat out there. And that's the thing that I don't think Zuckerberg really got. He needed to also bring a raincoat, right? He needed to secure and does need to secure his clients' data out there. And I really think that, in essence, was the primary point that Tim Cook was really making out there. If your mom says, take your raincoat because it might rain out there, make sure you, or if your child or grandchild says that to you, just make sure you have an extra raincoat. Because that will get the point across out there. And tell, your buddy that your mom cares for them. All right. So Robert writes in and says, our first radio show question. And I like how he does it because he does radio show with a question mark out there. And Robert writes in, isn't the VIX screaming bounce tomorrow? And doesn't the high volume days of the last week inside of the Qs mean a bottom? Just checking. So here's the... Let's make sure we keep things in context out here because, hey, look, you're absolutely right. You are a dedicated listener. I can't thank you enough for listening to the show. And you are right. The spot volatility index up 20% today, 20.4% as we speak right now. One-day rate of change greater than 10%. You will see some type of bounce inside the ES Mini. How many points? I don't know. Does it turn into a bottom? I don't know. The reason why I don't know, we go take a look at the Qs out here. So yes, but that's a bounce on the ES Mini. The ES Mini and the Qs are two different patterns out here. With regard to high volume inside of the QQQ series ETF, I think that the weekly volume is even more important. Forget about what went on last week. If we just simply change it to a weekly time frame chart out here, we're going to see that weekly volume out here from February the 5th, that was volume of 522 million shares, more volume than we've seen in probably 5 years. Yeah, that's right. 5 years inside of the Qs. That should have been screaming the bottom out here, but we're back down again, and last week was 363 million shares. So yes, sort of, yes, but then we have to ask ourselves, well, why isn't it a bottom? And here is truly the wild card. And I believe, Robert, that you are absolutely looking in the right area, which is simply, hey, what's going on above us, right? No matter what time frame it is we're looking at, you've got to go at least one level up as well as one level to the downside. That is how you avoid an accident. And if we take a look at the NDX right now, we can see that price had been moving higher, doing less relative energy as it hit its all-time highs out there. Now, that's not the problem. The problem becomes when the cavalry arrives, which, Robert, they did most certainly the week of March 23rd, when price gapped to the downside, closed below Stevie's red line in a big-time basis out here. And if we go take a look at the daily chart for the NDX 100, we know that it's got an island top pattern out there. So you've got two very bearish patterns that are competing against exactly as you put some bottoming type signals inside the NDX. So if we're going to bring this together as a family out here, what does that really mean to us? I'd have to say, Robert, that it means more likely than not that we're just inside a very large consolidation. And inside the NDX 100, as an example, I know it might seem like a lot, 228 points out here, right? 228 points. If we go take a look at the daily time frame out here, it's 165 is normal. 165 points is normal. That's the new normal for the NDX 100 as far as price movement over the last 10 trading sessions out here. So sort of normal out there. I hear what you're saying. You would use, how would you use that information? You'd primarily use it if you were trading equity futures out here. But you wouldn't use it necessarily as a sign to go ahead and go all in and call a bottom. You can poke around like subscribers and I did Thursday morning. Right? Thursday morning, you don't know, right. Thursday morning, we went long. We liked it when the Dow was up 400 points. We liked it when price pulled back, not as much, but pulled back and held a perigee pivot point inside the ES-mini. We didn't like what the NQ did. That wasn't helpful, though, what the NQ did. So we had a free trade, and we're closed out of those positions at break even. So we were poking around. So make sure that if you're poking around out here, you've got some really good reasons, and there were some great reasons why we went ahead and took that trade on Thursday morning. Just likewise, when it came to an end, there were just as good, enough of a listing of enough reasons. That's all I want to say. There just simply were enough reasons to say, yeah, let's not get cocky about this trade. Let's just simply go ahead, get this thing at break even, see what happens. Well, we're seeing what happens out here as we speak right now. We can just take a look at what the spot volatility index is trading at right now, which is 24.32 versus its 3-month contract, which is $23 even, Stephen. That's a dislocation that screams for a bottom even more so. And then take a look at what's going on in the 6-month contract. That's only trading at 22.80. 22.80 versus 24.32. So you've got the spot volatility index, again, trading above all futures contracts. It just tells you we're in this nasty volatility time period out here, but price is the winner. It is the arbiter. If we take a look at what's going on inside the summation index, New York Stock Exchange has hit a lower low today than it did about 5-6 days ago. However, its advanced decline oscillator has not hit a lower low. That is setting up a divergent pattern out here. The same can be said for the Dow. The Dow is at a lower price than it was about 5-6 days ago, but its advanced decline oscillator reading is not. That alone is not a signal where you would jump on board. But there are some divergences that are forming out here. Price was one of them that we were looking at. Now the advanced decline oscillator reading is another one, but we don't have any other signal to say that the work is done to the downside out there. So, Robert, that may be a bit more than what you were asking for, but, you know, we like to be thorough out here, and thank you very much for writing in. No other questions that I see, and we're going to be going to a break here in about 30 seconds, and then we'll do the 2-minute swing. So Facebook, we were talking about Facebook. I wasn't making fun necessarily of Zuckerberg, other than it. As soon as I heard his answer, it just brought me back to when I was just a little kid. Yeah, how old are you when you're in like the 5th or 6th grade? I can still remember that to the day, my mom saying that to me. Because I know at that stage, and I didn't even know that this is what I was saying, I had to say, something to think about. Yeah, take this coat to Chris. So he has a raincoat too. Steve Rhodes with TFNN. You've got Facebook trading out at 280.66, volume of 8.2 million. No, that's Netflix. That was Netflix that we're talking about. I have to put Facebook up on the screen. It hasn't broken through its hammer candle low. It's really trying to form a bottom out here. Zuckerberg just has to get his language in order.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the Dow's off 668. S&P is down 77 points. So we've taken another leg to the downside, 225 points for the NDX 100. Russell down 40 points. So semi's down 56 points. That's over 4% to the downside. One of our dinners posted that Apple's looking at putting in its own chips instead of Intel's chips into their Macs, and Intel is selling off quite a bit out there. I guess down about 4% as well. So here's what we're looking at. Although you're not looking at it right now, I could do this for everything. I'll just put the New York Stock Exchange chart up on my screen. I'm not calling for a bottom here, but all the charts are basically doing the same thing as we speak. When I say all the charts, let me qualify that. The Dow Jones Industrials, the S&P 500, the New York Stock Exchange, the Wilshire 5000, the Dow Jones Transports, Yeah, so those are the stock charts where prices are moving lower, doing less relative energy. That alone is not a signal out here. But if we did get a bullish reversal signal, for example, like tomorrow, or whenever it might occur, as long as this pattern is out here, that would be, as Robert puts it, screaming a bottom. Of course, the real scream would not come until price closed above Stevie's red line. Inside the New York Stock Exchange, as we speak right now, 12,390. Until that takes place, we're going to assume that the lows from February 9th, in fact, will be tested out there. And if they're taken out, and if they're taken out with volume, in many instances, that can set up a nice A to B equals CD to the downside. For example, in the case of the New York Stock Exchange, just to give you what that price projection could be, if in fact the February 9th level gets taken out with volume, you're looking at 11,429. Right now you're trading out at 12,140. That would just be the one-to-one. Price can make more than a one-to-one move to the downside. So, folks, thanks for being here. Hope you had a great weekend. Great. Thank you for joining us. But do stay tuned, because your favorite polar bear, my favorite polar bear, he is the world's favorite polar bear. That's David White. So he'll be up with some great information. Tom O'Brien, 3 to 5. I'll be back with you tomorrow again at 1 p.m. So have a great day. We'll see you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.